Oil pumps like these in Shanxi province are the workhorses of China's economic boom. But oil production is flat, far off the 10% a year growth of the country's runaway economy. China became a net oil importer 4 years ago, and there's little prospect of that changing.
Longer term, the Chinese ministries are just going to have to figure out how to run an economy based on imported crude oil.
Importing oil means paying world prices. This in turn affects industries used to subsidize prices and China's balance of payments. A big discovery would change the picture. With its main eastern reserves starting to dry up, China is placing its bets on the west, especially the Tarim Basin in Xinjiang province. Foreign companies have started exploring there, but data are sketchy and results so far disappointing. Besides, finding the oil is only half the solution.
The catch-22 then is, if I find it that far away from the population centers, which is to say far, far away from the people that will purchase it and use it, what do I then do? The answer is I run it 3,000 or 5,000 miles through a pipeline which doesn't exist.
With no sign of a big new discovery on the horizon, China has to make the most of its existing known resources. Modest but viable oil deposits were found at this site on Hainan Island 25 years ago, but this pump wasn't built until last year. Local oilmen say with China focusing on a big find out west, there's no money left to develop less prospective areas.
Right now, it's quite difficult to raise capital domestically. We hope to attract foreign money and start joint exploration.
But money isn't the only thing foreigners can bring to China. Just as important is their technology. Take this facility at the other end of Hainan Island. It serves an offshore natural gas joint venture involving America's ARCO.
The differential pressure keep 10.5.
When a typhoon hit last year, the entire rig crew was evacuated for 4 days. But the gas kept flowing, monitored and controlled from shore, thanks to ARCO's sophisticated remote control system. Also in the South China Sea, another US company found China's largest offshore oil field. But it took Amoco 5 years to work out how to overcome the technical challenges of extracting heavy oil lying under 1,000 feet of water. Their high-tech solution included innovations like these unmanned submersibles used for underwater maintenance. But with former state monopolies all over the world opening to foreign investment, it's a buyer's market.
And it is not an investment opportunity-constrained industry anymore. It's a capital-constrained industry. So to a certain extent, China, as is every other country in the world, is competing to attract these industry dollars.
Access to the downstream areas of the oil process, refining and retail, is a big carrot for large foreign oil companies. They like to be involved in all stages of the process to even out volatility in any one market.
And although most people say they're just there for the upstream today, their eyes are very clearly focused on the downstream as well.
But so far, China is choosing to go it alone in refining and retail, saying they don't see any pressing need for foreign investment in these areas. Frustrating for integrated oil companies, but they say they admire China's judicious approach.
I think that the Chinese have demonstrated something that, let me call it patience, that will help them get to where they need to go without over-investing.
And that's the challenge as China ponders the role foreign investors play in fueling its growing economy. Each will have to decide how badly it needs the other. Robert Stern, CNBC Business News, Hainan Island, China.